Hello traders, Gary Wagner here. Just about 10:20 in Honolulu, 4:20 in New York. It is Wednesday, 27th day of July 2016, and we are looking at the Dow Jones Industrial Average after the Fed speaks this morning, in essence closing unchanged, down about 1.5 points, which in the Dow Jones Industrial Average in essence is unchanged, 18,472. Standard & Poor's off by 0.13, just a little bit over 0.1% at 2160.50. The low on the day is 2152 and the high 2166. And oil, will certainly want to talk about that, closes at $42 a barrel, off about 2% on the day. The low 4168 and the high 4320. Absolutely interesting day in the equities markets. In the markets overall, of course, we did initiate a long position in gold today, buying in at around 32. Market closes at 41. Of interest to me right now in terms of trending markets are, first of all, crude oil, and then some of the currencies. First, Dow Jones Industrial Average, as I said, closed in essence unchanged. But one of the things that we talked about yesterday was really the identification of this rounded top. And typically when we see these rounded tops, that is pretty much a predominant signal that we're going to head to lower prices. I cannot find too many occasions, or on this particular area of the chart, any occasion where we actually got a rounded top and did not get some sort of follow-through selling. In fact, I'd be hard-pressed to find that rounded top, because one of the conditions of the rounded top is it's a series of higher highs, some sort of plateau, and then it begins to come down. So we're already seeing some weakness come into the market in terms of different areas that we want to look at. We've identified some fib levels, but 18,200 will look also at former tops in the market, because those will tend to match up also. And then if we look at our various fib numbers, as I said, we have this top here, but above that is the 23% retracement at 18,257. Wouldn't be surprised to see the market drift lower and drift to that point. One of the other things that we talked about on yesterday's show was, although we had the rounded top in the Dow Jones Industrial Average, we really have this flat top in the Standard & Poor's, where we've gotten these series of highs that are identical. Now, one of the patterns in terms of a really long-term pattern that I am starting to see in this market is simply tower tops and tower bottoms. Now, in terms of a candlestick pattern, there is a thing called tweezer tops. If these two highs, and you work with the wicks on this, not the real body, but if these two highs were equal, you would get tweezer tops. However, if you get a series of either that rounded kind of a top, or kind of say this, let me change my pointer here, but where you get these series of bottoms like this, this would be somewhat of a tower bottom right here. This would absolutely be something of a tower top. But we're seeing the potential for this market to come under some pressure, but it's remained pretty strong in the light of many of the factors that have come out. But the bottom line is consumer spending is up, earnings are decent, and so this equity market was able to have that momentum to move to these new record highs. I still believe 2,200 is possible in the Standard & Poor's. I, at this point, don't believe it will be on this particular rally. So traders, as you know, I've been looking for lower oil pricing. We've certainly got that. We can see that over the last couple of weeks, we've had a breakdown in price from about $50 a barrel to about $42 a barrel, market closing at $41.92. As you know, this is a 61% retracement. Now, does that mean that this is the area that I believe we will absolutely see a bottom in crude oil? Well, I'm not convinced of that yet. Here's what I do believe. First of all, we have been under the assumption that crude oil would trade lower and break below a price point, because it was in the 50s, of course, and then in the high 48s. But we were under the assumption, and the forecast model we were using, I was looking for at minimum 44 up to about $42, and that's where we would see crude oil drift. Now, crude oil's down about 2.75% today, 41.92. And we do have some really key tops in here. On a technical basis, we have a couple of tops. We also have this long-standing 61% retracement. So this is an area that we would look at for prices to stabilize, maybe see some sort of a bounce and then to lower pricing. But my sense was, as I talked about throughout the last month, is that we would break to this point and then either trade sideways or lower. Well, we have broken to this point, meaning that it is now hit our initial target, which was between $42 and $44. And if you recall, my sense was that once we got to this particular price point, as I said, we will probably either trade sideways or lower. Now, sideways, assuming we go sideways, we'll trade within a range. If it does track lower, the next real target is about $39 per barrel. That is our 50% retracement. Below that is 36. But as I said, let's see how the market reacts, because we certainly could get some sort of a bounce here, even if it's a small bounce before making a new low. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.